So yeah, you guys with me? If you're with me, please, you can just raise your hand up.
Because you can go and can help.
So yeah, I can see you guys are with me. So yeah, I'll share my screen now, so we can go on. So market structure 2. Okay. Now speaking about supply and demand. Let's start with supply and demand blocks. So supply and demand blocks are just what? They are basically rejection levels. They are basically zones. You can call them supply and demand blocks, or you call them what? Or you call them zones. So these are what? These are particular level in price where price what? Where price rejection occurs. They are particular levels in price where what? Where price rejection occurs. So that is what supply and demand block actually what? That is what supply and demand block means. So let me make an example of it here. So I believe we already understand, everyone here should already understand the concept of what? Market structure, which is what? You have uptrend, you have downtrend. Yeah. And we have our higher high, higher lows and everything we talked about before. Okay, let's make a quick recap for those who were on the class that day with us. So yeah. And yes, if you're not in the class the other day with us, you can watch. You can go into the Telegram channel. You'll see a video over there. The video of the class, I dropped it over there so you can watch. You can have an entire thing for everything we did over there. And this is basically it. So we'll talk about market structure. So market structure is just what? Is the first thing you actually see when you go into your chart. What do you mean by market structure is what? Your price graph, your price chart that you are seeing on chart is all what? Is what we refer to as market, is what we refer to as structure. That particular thing you are seeing on chart is all what? Is your structure. So that is your market structure. Now we have what? We have basically two things. Like I said, that price chart that you are seeing is what? Is the history of price. What price actually did what within a period of time. That is what a price chart is what is showing us. It is representing what? Price against time. So, and I said there are two things that happen in price. Is either price goes up or price comes down. So basically, when it is going up, price is in an uptrend, and when it is coming down, price is in a downtrend. And it is an uptrend. I said, this is an example of an uptrend. Is it over here? This is an uptrend, and this is what? This is a downtrend. Yeah. So in an uptrend, you have what? So you have series of new highs, price make new highs, and in a downtrend, price what? Price make new lows, because price is going downwards in a downtrend, and when in an uptrend, price what? Price is going upward. Yeah. So we talked about what? Break of structures. Break of structure was the break of a previous high in an uptrend and the break of a previous low in a downtrend. So when we have break of structures, it shows us price is actually what? Going in the direction, going like the trend is being followed. Let's say we're in an uptrend right now. We have a new high by an impulsive move. I talked about impulse and corrections. An impulsive move is what? A move that goes in the direction of the trend. So let's say we are in an uptrend. Whenever we have an impulse move for an uptrend, that will mean it will make a new higher high. So before what? Before a correction. After that correction is done and we have another impulse move. If that impulse move breaks what? Breaks the previous higher high, then you have what? We have a break of structure. And whenever we have a break of structure, it denotes that what? The trend is what is actually going on. The trend is what in continuation. So just like for an uptrend, it is for a downtrend too. So that is it about that. Then in an uptrend, you have higher highs when you make a new high, and when we make a correction, the lowest point after the correction is what is our lower high. And like I said, what makes up a trend is what? Your impulse and corrections. So an impulse move is actually the move that goes in the direction of the trend. The correction is what? Is a move that goes in opposition of the trend. as what? As a reset or correction for whatever upside or downside for whatever impulse happened. Because like I said, there has to be what? There has to be two sides to what? To create a balance in price. So buyers and sellers. So also we'll talk about internal structure. Whenever price can't just what? Price can't just move like this. You can't see price moving like this. This what? This is basically a textbook example. So whenever price wants to move, price what? Will move like, anyhow the price moves. So this what? Whatever you see, whenever price is moving, your highest point, your swing point, highest point is what? We'll call it pivot point. So swing high and swing lows. They are what you want to denote as a what? Your higher high and your higher lows. Those are where your what? Your higher high and your higher low is. And for a downtrend, so that is where your lower high and your lower low is. So anything in between is what? Internal structure. So these are what the recap of what we did in the first class of market structure. Now we'll talk about change of character. So the change of character basically means the trend of it, the change in a trend. So we are in an uptrend, the character changes from an uptrend to what? To a downtrend. That is when the change of character happens. Just like you can see over here, a BOS signals continuation, another BOS over here, inhaling continuation. Then what? A change of character over here. Let me just mark them out so you can be able to stay there. So a change of character, what signals a change of structure. A change of structure, yeah. If you're in an uptrend before, it sounds what? It changes what? To a downtrend. So just like this over here. So, and just like this over here, another change of character from what? From a downtrend to what? To an uptrend. So that is it about what? Change of character and break of structures. So also we'll talk about what? So this is a change of character in a clear example. In a clear example, this is a change of character. So an uptrend over here like this. We have an uptrend over here. We add an uptrend over here. Then what? It changes of character to a downtrend. Then what? Another uptrend. So that is it about that. So now we'll talk about what? We'll talk about strong highs and strong lows. So basically, a strong high is what? Is a high that causes what? The break of a low. And a strong low is a low that causes what? The break of what? Of a high. So that is it. So in an uptrend, you have what? You have series of strong lows because a strong low would sponsor the break of what? The previous high. And in a downtrend, you have series of strong highs because the strong high will what? Sponsor the break of what? A previous low. So that is it about that. So now we'll go on from what? From there to what? Supply and demand. Let's talk about supply and demand today. So yeah, like I was saying initially, supply and demand blocks or zones. Like I said, supply and demand blocks or zones, they are basically okay. Are you guys with me? If you are with me, raise a thumbs up. Give me a thumbs up if you are with me. They are basically what levels in which you expect what you expect you expect rejections or what or continuations or whatever. So they are basically levels where what where price actually what they are key levels where price make rejections. So now let me just make an example of it. We're in an uptrend right now. Just like in basic economics, demand or what demand represents buy, supply represents sell. So basically, whenever you see the market going in an uptrend, you look for demand zones. Demand zones are found in what in an uptrend. So basically, yields will be something like a demand zone. So basically, whenever you see a rejection like this, whenever you see a rejection like this over here, that is what this is a demand block over here. A demand block is actually a block that sponsors a what an impulse leg for an uptrend. An impulse leg for an uptrend is what a demand block does. So whenever you have a demand block, fine. Talking about what is in supply and demand block, to actually talk about that later. So you don't need to know what is there right now, but we'll talk about that later. But demand block and supply blocks, demand block is just a block where what whenever price reaches there, it starts buying. So it starts going up. And that is a demand block. And just like it is for supply too. Whenever I see price in a downtrend, whenever I see price in a downtrend, that will mean price is what is respecting series of what supply blocks too. Is respecting series of what supply blocks too. So supply blocks do what? They sponsor the market what to actually sell off. So demand blocks actually do what? They sponsor the price to actually what to buy off. So that is the difference between the two. So yeah. So yeah. No. No, that is that all that. Now let's go on chat and find some examples of it. So maybe you can probably get me better. Okay. Right now over here, let me just clear everything over here. So now there are more things that I actually explain to you about supply and demand block in case I want to forget. So yeah, if you actually say you want to actually look for demand blocks or supply blocks, you must have gotten what a valid structure. And for you to actually get a valid structure, you have what? Are you in an uptrend or you? Sorry for that. Are you in an uptrend or what? Or are you in a downtrend? If you're in an uptrend, you must be seeing what sales of break of structure. Now, something about a demand block is this: whenever you say demand block, you actually expect it to sponsor the next break of structure. You actually expect it to sponsor what? To sponsor the next break of structure. So whenever you see what a supply block too, you actually what expect it to sponsor the next break of structure to the downside too for a downtrend. So that mean a demand block sponsors what? It sponsors the break of structure towards in an uptrend. The break of the previous high in an uptrend. That is what a demand block does. And it's a demand block too. A supply block too in a downtrend. It sponsors what? The break of the previous low in a downtrend. That is what a supply block does too. So basically, before you can look for a demand or supply block, you must have somewhat a valid structure, a break of structure, and a continuation in trend. So that will make you particularly know where to look for a valid demand or supply block. So let's see this over here. Let's draw our structure and see how it is going over here. So I'll go with this structure. These structures are not really good for us, so I might actually not get a lot of valid stuff around there. But let's go with this structure. Yeah. So I hope you guys are with me and you are getting everything you're doing over here. If you're with me, you can just raise a thumbs up. You can send a message in the chat group. It is not a valid structure. No. So yeah, let's go with this. Now the first thing I want you to note over here is that this tiny break of structure over here. This is a break of structure over here. Now after the break of structure, what? We got a pullback over here. We got a pullback, giving us what? A lower high. After the break of structure, this what? This is a lower low over here. A lower high over here. Another lower low, another lower high, another lower low, another lower high, another lower low. If you want to draw a structure, you might probably not draw it this particular way, but this is the best you could have gotten from this kind of structure. So let's go on. Now, we want to pick the supply block. I said in a downtrend, you look for what? You look for supply zone. You want to pick a supply block over here. Over here, if I actually go down to a downtrend, I will see more what? I will see more zones over here because the lesser we go, the lesser the time frame will go, the more the candle. So yeah, this is what? This is a supply block over here. This is a supply block over here. And now after what? After corrections into that supply block, what do we see? We see what? It's sponsored what? It's sponsored the next block of structure over here. After that break of structure over here, we got what? We got another what? Another correction. Now, whenever we see a break of structure like this, look this. This is what? This is a break of structure over here. But whenever you see a break of structure, this doesn't mean this particular low is what? Is the lowest point. Whenever you see a break of structure, before you actually see wherever your correction ends over here, which is over here, the lowest point formed after that break of structure is what? Is your lower low. Which is what? Which is this. This is a lower low. Over here is a lower low. No what? Not this. Because this is what? This is the lowest point formed after what? After this particular break of structure. So you have to know that. It's very, very important. So now, sorry. So now, yeah, after this particular break of structure, the lowest point formed after that particular break of structure is what? Is a lower low. After our lower low is gotten over here, let me just clean all this off so you can what? You can be able to follow more. Yeah. So now after this lowest point over here, we got what? We got our lower high over here, which is what? The highest point formed by what? By the pullback. Now this particular highest point formed by the pullback over here, this is what? There is a supply block over here. Yeah, there is a supply block over here. You know, you can't know it yet, just yet. Oh, but there is a supply block over here, just like that. Now, okay, sorry. After rejecting from that supply block, what happened next? What? We got the next break of structure over here. After the break, yeah, sorry. We got the break of structure over here. After the break of structure over here, this is what? This is not the lower low. Yeah, this is not the lower low. This is not the lower low. This is what? This is the lower low. Fine, if you want to grow your structure another way, you might what? Say, let me get you to something. There are series of ways you can what? You can draw your structure, depending on what? Depending on how you want to what? How you want to trade it. Now, talking about the structure, this might be an impulse move. This is a pullback. This is another impulse. This is another pullback over here. This is another impulse over here. So, if I draw my structure like this and I'm dealing with this will actually be my this will actually be my lower low, and this will actually be a break of structure for me over here. Out, and another break of structure for me over here again. Do you get that? But I'm not using that. I'm using what? I'm using what I grew initially. So let me just clean this up so you can get me better. So this is my what? This is my lower low over here. So the way you draw your structure is actually dependent on you and dependent on the way you want to create it. It is just very, very important to what? To master yourself with it. To master your structure is very, very important. Structure is the fundamental most important thing when it comes to technical analysis for any strategy. So after that, we actually what? We got our lower low over here. And yeah, I want you to what? To actually note this. This high over here is what? Okay, let's do this. Let's say you have a lower low over here. You have a lower high over here. You have another lower low over here. You have another lower high over here. You have a new lower low over here. And you have another what? You have a change of character like that. You have what? You have a higher high, a low higher low over there. And you have what? A higher high over here. No, let me clean this up. So now, a break of structure over here to the downside. Another break of structure over here to the downside. After that, sorry. After that, you had a change of character over here. These are previous lower high. So that the break of that previous lower high is what? Is our change of character. So let me just write it over here. COCH. It's COCH over there. So now, getting that COCH over there means what? It change from this particular downtrend to what? To an uptrend. That is how it is. I'll clear this up. Let me just make it cleaner. So yeah, you guys can see that. We've changed from the bearish structure we had initially to what? To a bullish structure by what? By getting this change of character. By getting this change of character. So now, talking about supply and demand over here. After this supply block over here, we actually what? We actually got a break of structure. Over here, there's actually a supply block over here too. Let me just mark it from here. This is a supply block over here. Yeah, that's another supply block over there. We rejected from what? We rejected from that particular supply block. And over here again, this is what? This is another supply block. We actually get to what you draw in your supply and demand blocks. We actually get there later. Those are your other blocks, FVGs, and whatever. So we'll actually get into that later. I'm just trying to make you understand supply and demand blocks. Yeah. So and how you use it. So afterwards, after rejection from this supply block again, you actually go the next block of structure over here. Go the block of structure over there. And after that block of structure, we made the lower low. We made this lower low. After that lower low, we got the change of character over here. Now, I want you to focus on this. Oh, sorry. Okay. After the change of character, we've changed into an uptrend. Now, automatically, whenever you're in a downtrend, you're having supply blocks to be respected, yeah. So when you automatically change, when you change your structure from an uptrend to a downtrend or a downtrend to an uptrend, automatically opposite block forms. Okay, let's say the market is respecting supply blocks in a downtrend. Automatically, when you change from a downtrend to an uptrend, the market starts respecting what? Supply blocks. It starts respecting what? Demand blocks automatically. Because you've changed from a downtrend to an uptrend. And demand blocks are seen in an uptrend. So automatically, instead of looking for supply blocks, since you've seen a change of character, you'll be looking towards what? A demand block. And yeah, these are demand block over here. You can see the market touching it and rejecting perfectly. We can see the market touching that and rejecting perfectly. And after that rejection, we got the next block of structure over here. So I hope you guys are with me and you are getting it. If you are not, you can comment chat box in the Telegram channel, so I can attend to you. But if you are getting it, so we'll go on. So now that's another block of structure over there. Let me just indicate it over here. So, and like I said, break of structure means US means what? The break of structure. So that's it basically. And after the change of break of structure, we did what? The market started coming down again, and yeah, it did what? It actually went back into a downtrend. So this is very, very possible. Like I said, when I was talking about change of character in the other class, I said whenever you have a change of character, you want to see the first change of character first, then another break as a confirmation. Yes, this is a confirmation, and this was supposed to be our supply block, our demand block over here. The market should actually respect before to actually go up again, but actually failed it and continued in a downtrend. So you should be able to expect any possible scenario when it comes to pricing and be able to beat any possible scenario. And yeah, I might have read this. Oh yeah, I might have basically analyzed this as a downtrend over here, as an uptrend over here. But depending on the way you analyze the structure, if you want to analyze my structure in another motive, I can probably have analyzed everything as a downtrend overall. So it depends on the way you analyze the structure. So basically, you have to focus on the way you analyze your structure. Master your structure. Master yourself it. So before you can master your structure, you have to go through a lot of charts. But that is basically it. You have to master your structure. Okay, let's say this. Let me say this. This is demand block over here too. Which the market actually was respected, so actually was start coming down. And this is where we got the concept of what? Internal structure and structural order flow. Why am I saying this? Now this is demand block over here. I shouldn't be going through this yet, so you actually won't get confused. So let's go on. Let's check another chart for demand and supply blocks. So we won't actually get off the rail. So let's go on to BTC. So I can actually show you some charts on some trades I took. So this is BTC for our plan. So now this is BTC on a 4 hour time frame. And this, I shared this chart basically this morning. So I don't actually expect this to be happening though. Let's see whatever happens on BTC. But just yet, I'm not sure we'll go down just yet. Yeah, let's go structure over here. Now, I want you to look at this. I'll change this so it doesn't look so big. Okay, let me make it look a little big so you can actually be able to keep track of it. So yeah, I want you to check the structure over here. No, the market is basically what in a downtrend over here. Before now, it's basically a downtrend for so long before. So yeah, this was the beginning of the downtrend.
Okay.
Okay, so that's it. Now we had a break of structure over here. This particular, all this particular, this out. Okay, let me just zoom in more so you can see it better. This is a break of structure over here. You know, we had this low. So now after that break of structure, we had what? We had a pullback into what? Into supply level over here. This is supply level over here. This particular level. This particular level. As you can see, the particular level in orange. That's the supply block over there. So the market did what? The market tested that particular supply level and did what? Rejected. Tested it again over here. Tested it again over here. The second time, you can see it once and twice. This is the first time. This is what? This is the second time. So, and after rejecting the second time, I started looking for short positions. And like I said in the last class, I said whenever you actually analyze your chart and you see what is going, I said it yesterday and I said it in the first class too. Whenever you analyze your chart and you see what price is doing and where price is going, what you want to do next is what? Look for opportunities to ride along with direction pricing. Okay. So basically, for see demand supply over here. This is a break of structure. This is a break of structure. There is a pullback. I see supply block over here. I what? I shorted. What's short over here? After that, you had what? You had another pullback. I see supply block over here. I what? I shorted again with another impulse. You can see I'm what? I'm shorting the I'm shorting what? Impulses. Whenever I see supply block, I expect the supply block to so another block it to another impulse. And that's what I'm whenever I see supply block, I what? I need keep and what? I look towards shorting again for another impulse. So this is one impulse, another impulse. So we actually got another impulse over here too. Let me just go into the 12 time frame so you can see it better. And that is where the concept of multi time frame analysis actually what actually pays off. You actually should be able to know when to use it. You know, stick to one time frame. So over here too, you can see. Let me analyze the structure in the 12 time frame. The market is in what? Is in a downtrend over here too. A pullback, a tiny break of structure, a break of structure over here, another pullback over here. You can see it very clear. You know, going on again and again and again. So let me go to one now time frame so you can see it later. my chart will look like Dragon, but I'm sorry about that. I can't use a plain chart so you can see everything better. So this is a break of structure over here. After the break of structure, what? We made a lower low over here. Sorry. Yeah. After the break of structure, what? We made a supply. We made a lower low over here. After the lower low, we pulled back into what? Into a supply level or supply block or supply zone, whatever. So when you pull back into the supply level, you do what? You see another impulse, then another what? Another pullback again. After the pullback over here, I could have shorted, but I didn't short it actually. But this is what? This is another supply lock, another supply block over here. After mitigating that supply block, mitigation, whenever we talk about mitigation just means orders getting triggered. Whenever you have a supply block or a demand block, whenever price reaches for that particular supply or demand block, and it actually what? It actually triggers and goes in the direction of that particular supply or demand block. That is what we call mitigation. So whenever you have a block, we expect it to what? To get mitigated. Okay, let me say this. Let me just put this as an example. I'll be using the word mitigation frequently so you're able to understand it. This was this trend. Yeah. In an uptrend, I said you have series of what? Demand blocks. And those are what? Those are demand blocks. So let's say you have another demand block over here. Price coming into this first demand block and what? Tagging it and going up means what? It has been mitigated. The second one too has been mitigated. The third one is unmitigated. Why is it unmitigated? Because price has not reached for that particular block or test it and what? And reject by going up. So that is unmitigated. So that is what mitigation and non-mitigation means. So now this supply block has been mitigated over here. The supply block over here. Let me just so you can see better. The supply block over here after the break of structure at this particular low. It got mitigated, then another what? Another break of structure. You can see I took a position over here. This position, I took it over. That was very fast. Actually. So and after that, price was kept on going in a downtrend. Going in a downtrend. This is another break of structure over here. A very tiny break of structure. Hope you guys can see that. This is another break of structure over here too. So when you go into your lower time frame, you're able to spot all this break of structure very well than this. So and after that, price did what? Price rejected and went into a correction phase. So now I want you to know this. Let's talk about the concept of structure and substructure over here. Everything over here, everything you can see over here is basically what could basically look. You know, I've made at least this is a first trend, this is a first downtrend, this is another downtrend. But on a 1 day perspective, let me go to a daily time frame so you can see. On a 1 day perspective, this is just one impulse move. This is just one leg on a 1 day perspective. You can see. Let me delete everything I have over here. So yeah, see this. On a 1 day time frame, this is just one leg. But when you go down to something like a 2 hour time frame, you see what? You see multiple legs. You see multiple legs. So now those multiple legs you are seeing on this structure. That's why and the set of what structural other people. So we talk about that previous. So you can see in the downtrend, you are seeing what you are seeing a series of legs inside this. You are seeing impulses and pullbacks, impulse and pullbacks, impulse and pullback. Over here now, these what this might look like an uptrend over here. Could be looking like an uptrend over here, you know. Yeah, this is looking like another trend over here. But these are not trend, as you can see. These are not trend, as you can see. But on the 1 day time frame, this is what? This is just a pullback leg. Let me just basically draw this so you can understand it better. Now let's say you have this. No, let's say this is a 1 day time frame. When you go into your 2 hour time frame, you might see something like this. Focus on this. It's very, very important. These are will get confirmation entries and what. Okay, let me get where I These are get confirmation entry. Now, on the 1 day time frame, this is what? This is a bit of structure on the 1 day time frame, right? But when you go ahead on your structure, you see what inside that one leg that you see on your 1 day time frame, you see what you see a trend inside it on your what on your substructure, on your what on your substructure, which means your lower time frame. Now in that particular trend, you actually what decipher it into what break of structure, just like you can. It's just like price is fractal. Fractality in price is what we call it. What you see on the time frame is what you see on another time frame. You just have to be able to what when you know how to analyze your structure, whatever you analyze on a particular structure is what you what project and analyze onto another structure, onto another time frame. Okay, let's say you have what you have a break of structure over here, just like you're having break of structure over here, and you have series of break of structure. Whenever your trend want to change, it will you see a change of character. That's just how it is. So basically, you have what you have another trend, a downtrend, another trend again over here. But on a much higher time frame, you have what you have just one leg, an impulse and a pullback, an impulse again, and then a pullback and going on. So when you are on a much higher time frame, you have what you have just legs, impulse, pullback, impulse, pullbacks. But when you go down to a much lower time frame, you do what you have trends inside what inside those legs. Why is this happening? That is why I said you should go ahead and learn the concept of what time frames and candlesticks. So on a 1 day time frame, one candle represents what? One candle represents 24 hours. But on a 2 hour time frame, that will mean that particular 1 day candle represents what? Represents basically 12 candles. So that will mean what? It is what it's. Let me just bring it to this. What you see over here is what? Is a 2 hour time frame. When you go down to a daily time frame, it's what? It looks very small. That will mean it is what? It is compressing and expanding depending on what the lower time. When you go to a lower time frame, it expands. When you go to a much higher time frame, what is what it compresses. So that is what is happening. So and when it compresses, the action in the same price is what is compressing too. So it is very, very important to actually what to actually know how to analyze the structure and be able to divert in between the two in between the two time frame, the main structure and the substructure. So the much higher time frame is what your main structure, the much lower time frame is what is your substructure. So that's just how it is. You can see it over here, like I've run it over here. So on a much higher time frame, this is what this is just one like an uptrend. This is just what an impulse, a pullback, another impulse. But on a much lower time frame, we have a substructure inside it. So which is what which is basically another trend. So that is about that. So now talking about demand and supply blocks, I believe I've said enough about it and you guys understand well enough about it. So you guys are with me, let me know. So we have about how many minutes left? You have about 15 minutes left. I will take if you have any requests, any analysis you want me to check out to make as an example of it. So while we are in the class, while you are on the class, so you can put it on the chat group. So I'll analyze whatever I put on the chat group so we can use that as an example for the next 15 minutes before we end the class. So I don't think there's any request. So we'll end the class over here. So tomorrow we'll go on with premium and discount. Tomorrow we'll go on with premium and discount. So I hope you guys enjoy the class. And I'll see you next class.